Thank you very much for your time. I mean, the last time we had you with us, you said the big risk is oil for markets, right? Now, oil is down. Oil is down to about $104, $105 a barrel. How are things set up on global indices? And, if you have a word on the Nifty as well, in terms of the structural setup.
Yeah, so yes, oil has been stabilizing, which is great to see. It was as high as $130 in terms of WTI, and I think it's around $100 now. And the good news is the U.S. has said that they're going to be releasing their reserves, about 180 million barrels of oil, and that's going to take the pressure off oil prices. So I think that's good. And in the meantime, the Russia-Ukraine situation seems to be sort of not stable, but, controlled. And the rhetoric that we're hearing out of U.S. news anyways is that Russia is having a hard time making inroads in Ukraine. So I think the situation is, sort of controlled. So that's great to see. U.S. dollar is a bit, we're seeing some upper pressure strengthening a bit. And in the context of emerging markets, that certainly doesn't help, especially if U.S. dollar spikes, but we don't see it that way. It's sort of a, in consolidation mode. So that's great to see as well. So we're seeing in China, we just upgraded the market to confirm the uptrend. And despite, I think, we're seeing some consumer data sort of weakening, but the market itself is looking like it wants to break out again. So that's good to see as well. Now, coming back to India, India has been doing great ever since oil prices sort of retreated. We're seeing the market in confirmed uptrend. It is about to run into a bit of a resistance. For example, Sensex resistance is going to be about 59,550. But we do see support at the 100-day moving average, which is about 2% below where we are now in terms of Sensex. Okay. But very strong market.
Okay, Dean, hi, good morning. So you spoke about Sensex. Have you tracked the charts of the Bank Nifty here in India? Because that's the leading indicator of the market or the lead sector. Any thoughts here?
Yeah, so looks like, I heard you speak about HDFC Bank. It's up today, and it looks like it's sort of, breaking above the 200-day moving average. So if HDFC can find support at the 200-day moving average, and we head into earnings and they produce decent earnings, we could kind of see the bank sort of rallying towards the right side of the base here. But I am noticing a lot of financials breaking out in India, particularly, public banks such as Federal Bank, State Bank of India. You have some other financial institutions like Credit Access, Grameen, as well as Cholamandalam, consumer finance companies like that. The charts look really great. It's about to break out. So I am hopeful that the private banks like HDFC, ICICI, Kotak Mahindra, they can find some stability and start to form the right side of the base. So I would start to enter the trade, at slightly above midpoint resistance. So maybe, take a look at how those private banks are trading. And if we do see strength and support, especially above the 200-day moving average, I think it's, worth thinking about a trade there.
Dean, noted some of those stocks that you just mentioned, but the last time we chatted, you were a little bit skittish because of oil prices spiking up, but clearly that cooling down is a positive for the Indian markets. And you briefly mentioned about a couple of stocks, which by the way have done quite well. Linde India, that's making fresh highs on a day-to-day basis. From elevated levels, it's already given you good returns. And Sun Pharma, you had briefly spoken about both these two stocks the last time around. What's the view out there?
Yeah, so Sun Pharma, it's doing great. I would say I would add Cipla to that mix as well. Cipla is just breaking out now. So I think you have some healthcare names starting to break out. And as well, of course, the industrial names continue to lead in India. You have a lot of great industrial names such as Reliance Industries, Adani Enterprises, Vedanta, which is mining company. Companies like that. The charts look perfect at the moment. They're about to break out now, so I would take a look at those. And then, consumer-related names, VIP Industries, Page Industries, Trent. You have Indian Hotels, EIH. Those are all, looking really great as well. So I think a lot of good stocks to choose from at the moment.
Reliance actually was one of the reasons why the market spiked on Friday towards the last 30, 40 odd minutes of trade. It started to participate. So if one can't possibly trade all, Dean. So out of all that you've mentioned, and maybe you've got more, which are the best setups according to you? I mean, if you had to pick three.
Yeah, if I had to pick three, I would say the first two would be in the industrials, Reliance Industries and Adani Enterprises. The chart looks perfect. And then I would also say on the financial side, Credit Access Grameen. It's just breaking out from an early stage base, and I think it's a wonderful opportunity there. So yeah, I would look at those.
Some of these auto names like Tata Motors and any other that you would have looked at, Dean?
Tata Motors, yeah, it's trying to make its way back above the 200-day moving average, and so I would give it a little bit of more time on that one. Let's see if we can form a base and start to break out from a base. But it is encouraging to see the stock, sort of breaking above the 200-day moving average for the first time in a long time. So I think these types of names are making a comeback as well.
Dean, what about some of these consumption-related stocks? You mentioned a few of them, but what about the likes of Hindustan Unilever, Nestle? They have seen quite a big correction from the recent peak, even Britannia. Frontline names, do you have a view on them?
Yeah, I mean, I haven't looked at those charts recently, but if I look at some of these consumer names trying to, starting to work, I would think, those names will, start to work as well, especially given the fact that, India is about to open up in terms of, you were talking about not wearing masks and so on. And I think that's why, Indian Hotels, EIH, they're starting to break out. It's a reopening trade. And so I think, let's take a look at the charts and make sure that it can, find support at the right levels and enter the trade there.
All right, Dean, thank you very much for joining us. It's a pleasure having you with us here on CNBC TV 18.